So hi guys, welcome back. Once again, good evening all of you. We are looking at RTP. We have completed some standards. We have completed some chapters. Now let us start with Accounting Standard 9 Revenue Recognition. So Vrinda, can you read this please?
Yes, sir. An infrastructure company has constructed a mall and entered into agreement with tenants towards license fees, monthly rental, and variable license fees, a percentage on the turnover of the tenant on an annual basis. Chief Financial Officer of the company wants to account or recognize license fee as income for 12 months during current year and variable license fee as income during next year. Since invoice is raised in the subsequent year. Comment whether the treatment desired by the CFO is correct or not.
Bouncer, this is a super duper question. This is not CA intermediate question. Congratulations to you. This is CA final question. Oh my God. We'll discuss. Very interesting. Put a star mark. Then read B point also, ma. B question.
Indicate in each case whether revenue can be recognized and when it will be recognized as per AS 9. Trade discount and volume rebate received.
Again, star mark. Very important. Next.
Where goods are sold to distributors or others for resale. Where seller concurrently agrees to repurchase the same goods at a later date. Insurance agency commission for rendering services.
Super. Always see, I have seen this trend of giving difficult questions in RTP, sometimes much more than examination level. Sometimes, you know, unfortunately, even it happened with me. When I open RTP, I used to lose my confidence. So my whole preparation of, you know, that study material is over, practice manual. Those days we used to have practice manual also. Practice manual, study material thoroughly I prepared, and then I come to RTP, bold. This nowhere they discussed in study material, I'm sure. This nowhere they discussed in study material. This is actually from IFRS. I am surprised. You know, this treatment is never there in AS9. And this question is also, I have never seen this in AS9. So this is a bouncer. This is a bouncer. Don't worry about it. These kind of things will happen. Even in exam, this might happen. If, you know, question from some other planet is falling, you know, in your exam hall, just ignore it. Don't even spend 1 minute of time on that. Complete remaining whatever you know. Then at the end, once you thoroughly have written all the other questions, then come and experiment with this kind of questions. Okay, now let us read the answers. So let us go to question number 14 answer. Read this, ma.
As AS 9 on revenue recognition is mainly concerned with the timing of recognition of revenue in the statement of profit and loss of an enterprise. The amount of revenue arising on a transaction is usually determined by agreement between the parties involved in the transaction.
This language, my dear friends, I'm telling you, this is called IND AS 115 or IFRS 15. Nothing in AS 9 speaks about the terms and conditions and agreement and performance obligations. So if you do not know this question, don't worry. This is a new question. Okay. Again, I'm telling you, ICAI might ask this kind of questions in the exam also to surprise you or to kill you. Let it be. 1 question, 2 questions, always risk will be there. Continue.
However, when uncertainties exist regarding the determination of the amount or its associated costs, these uncertainties may influence the timing of revenue recognition.
Okay, further, this associated costs also is not discussed, you know, in the study material. Uncertainties about determining the amount, that is still there. Now guys, I'll tell you, tell me what is AS9 name? Vrinda, what is AS9 name?
Revenue recognition.
Revenue?
Recognition.
Revenue?
Recognition.
Recognition. What is this, you know? This is revenue measurement. Amount of revenue to be recognized. It is not recognition principle. It is measurement principle, which is literally outside AS9. So this is a proof that the amount of revenue arising on transaction, the amount of revenue. So you have done complete AS9. It speaks about revenue recognition out of sale of goods. It speaks about revenue recognition out of rendering services. It speaks about revenue recognition when the enterprise resources are used by a third party, which gives royalty, interest, and dividend. Nowhere in AS9 they spoke about the amount of revenue. This is, dear ICAI or dear person who compiled this, even if you are taking some question from CA final level, it should be relevant. This is literally out of AS9. AS9 never spoke anything about this agreement between the parties. If you know IFRS 15 and Ind AS 115, it is revenue from contracts with the customers. In that we discuss about the terms and conditions. That is revenue measurement standard also. So, you know, this is like, you know, in street cricket, you are applying international rules. So this amount of revenue to be recognized, associated costs. So I'm feeling sorry for CA inter students, but still what to do? Continue more.
Further, as per accrual concept, revenue should be recognized as and when it is accrued, that is recorded in the financial statements of the periods to which they relate.
This is your level. Revenue to be recognized when it is accrued, not when it is received. So this is AS9. Next, continue.
In the present case, monthly rental towards license fees and variable license fee as a percentage on the turnover of the tenant, though on annual basis, is the income related to a common financial year.
Okay.
Therefore, recognizing the fees as revenue cannot be deferred simply because the invoice is raised in subsequent period. Hence, it should be recognized in the financial year of accrual.
Correct.
Therefore, the contention of the chief financial officer is not in accordance with AS9.
So all of you read these 4 lines. So guys, if you look at the question, an infrastructure company has constructed a mall and entered into agreement with the tenants. Okay. Towards license fee, that means monthly rental, and variable license fee, which is a percentage of turnover of the tenant. Now, let me give you one example so that you understand. This is the question in CA intermediate. For the first time, I'm looking at it. But to enable you to understand, I'll give you a small example. Say, Vrinda, there is one Lulu Mall. Hello, Vrinda
Yes,
madam.
sir. Yes, sir.
You have taken one small ice cream shop.
Yes, sir.
So you started Vrinda ice creams in Lulu Mall. Second floor,
Yes.
PVR is there. Outside PVR, you have put one ice cream stall. I am the owner of that mall, and I told you every month you need to pay 1 lakh rupees rent. You said, okay, sir. And then I said, oh, hello, 10% of your turnover also is my rent. You said, okay, sir. So there is a fixed rent and there is a variable rent. What is fixed rent? Monthly rental. What is variable rent? It is calculated on percentage of tenants turnover. That means how many ice creams you sell, how much of sale revenue you generate. On that we calculate a percentage and you need to pay it on annual basis. So every month you give 1 lakh rupees to me. At the end of the year, you will bring all the sale revenue numbers to me, and on that we apply the percentage, whether it is 5%, 10%. Then you will pay, Pavan sir, take this money also. Now it is speaking about my revenue recognition principle. So what CFO is saying, he wants to recognize license fee. What is license fee? Monthly rental. License fee during the current year, but variable license fee as income during the next year because invoice is raised in the subsequent year. So sale revenue of Vrinda for the current year is, say, for example, 1 crore. On that 1 crore, 10% is 10 lakhs. So on 31st March, only I will come to know this. I am generating invoice in the next year. Because I am generating sales invoice in the next year, I am saying I will recognize this in the next year. Accounting Standard 9 will slap you and say, shameless guy, when it is accrued. Current year. So you have to record that when it is accrued. No, you cannot record when invoice is raised, or you cannot record when it is received. So the contention of CFO is wrong. Vrinda, you understand this example?
Yes, sir.
Hello, all of you remaining people, please let me know in the chat box. Everybody, did you understand this example? Everybody, please respond. Very good. I am sure if this kind of questions are asked in the exam, people won't be able to write. People won't be able to write. Okay, so 14A is over. Can we go to 14B? Now, you tell me, what about trade discount and volume rebate received? Ma?
Sir, it is not a revenue.
It is not a revenue, but what to do?
It is subtracted initially.
Correct. So you are selling a product at 100 rupees. Okay. So I came to your shop and I asked, hey, how much is this? You said this is 100 rupees. I negotiated. I said, can you give me 10 rupees discount? You said, okay, take it for 90. So then what will you do? In the invoice also, product 100 rupees, less discount 10 rupees, price 90, like that only invoice will be raised. No? So if any discount is given, that should be subtracted. This is trade discount. Another interesting thing is volume rebate. Volume rebate. Volume rebates normally will be given on achieving certain, quantity. For example, listen carefully. This is also little, advanced point. It is not CA intermediate level point. If I understand it properly, in my opinion, I mean, say there is Samsung and there is Bajaj Electronics or Pi Electronics. This Pi Electronics or Maiji, or any mobile retailer is buying Samsung phones. So I am Bajaj Electronics or Pi Electronics. I went to Samsung and I asked, hey, can you give me 20% discount? Then they said, in a year, if you purchase 1 lakh mobile phones from me, then I will give you 20% discount. First month I purchased 8,000 units. Second month I purchased 20,000 units. No discount. First month no discount. Second month no discount. Third month I purchased 8,000 units again. Fourth month I purchased 14,000 units. Fifth month I purchased 18,222 units. So they will accumulate. One fine day during the year, Pi Electronics will tell, oh, hello, Samsung, dekho, cumulatively in the year, I bought 1 lakh mobile phones from you. Now give the discount. Then Samsung calculate discount on all the earlier purchases. From the beginning of the year, all the earlier purchases they calculate. And they will say, okay, dear Pi Electronics, you are eligible for 22,50,000 discount. So they will generate a debit note and a credit note. So that will be reduced from the account of the customer. So what Samsung will do is Samsung will open Pi Electronics ledger account. Pi Electronics is Samsung's debtor. So whenever goods are sold, first month goods are sold. So what is the journal entry they will pass? Pi Electronics account debit to sales account. Pi Electronics account debit to sales account. Pi Electronics to sales account. Like this they are writing. Now what they do is by quantity discount allowed 22,50,000, they will reduce the amount receivable from Pi Electronics. This is volume rebate. Hello guys, all of you, do you understand what is volume rebate? Now, Pi Electronics has to give 5 crores to me. Pi Electronics has to give 5 crores to me. Now I have given 22,50,000 volume rebate to them. Can I subtract it and can I show sales, my net sales as 5 crores minus 22,50,000? Can I show that? Yes or no? Yes, that's all. That's all. So look at this. Trade discounts and volume rebates received are not encompassed within the definition of revenue. This is irrelevant for you. They represent reduction of cost. Yes, trade discounts and volume rebates given should be deducted in determining revenue. That's all. Trade discounts and volume rebates should be deducted in determining revenue. That's all. Then second one, goods sold to resellers. Look here, when goods are sold to distributors or others, revenue from such sales can be recognized if significant risk of ownership have passed. However, in some situations, the buyer may in substance be an agent. In such case, sale should be treated as a consignment sale. Simple answer. Now, you are selling goods to a distributor. You are selling goods to a distributor. I'll give you one simple example. Sandeep, do you know EVM motors in Cochin?
Yes, sir.
So EVM motors, who are they? They are resellers of cars. They are sellers of cars. For example, if you want to buy, say, BMW car, that BMW showroom you go na, if you look at the board, EVM Autocraft, EVM cars, big bench board will be, big BMW board will be there, but the legal entity is EVM Motors. Now BMW has sold 50 cars to EVM Motors. EVM Motors purchased 50 cars and they are reselling it. This is one business model. Another business model is BMW goes to EVM Motors and asks them, hey, put my 50 cars in your showroom. Whenever you sell, give 90% to me. 10% is your commission. This is another business model. So in substance, who is EVM Motors now? Based on the terms and conditions between BMW and EVM, EVM may be principal if they are buying it and selling it. If they are buying cars in wholesale, selling cars in retail, then they are principal to principal. If they are working as my agents, they will not buy goods from me. I am keeping goods in his showroom. If that is the case, when EVM sells goods to outsider, then only BMW can recognize. So whether EVM is my consignment agent or whether he is my customer who is buying goods from me in wholesale, that makes all the difference. So you understand this. If goods are sold to distributors, if the distributor is behaving like principal to principal, then you can recognize sale. But if distributor is my agent, then I should not recognize sale. I should treat it as consignment. Hello, you understand this? This third one is a killer, I am telling you. Substance over form. Okay, now look here. Understanding these things are also beyond CA intermediate level. So Pavan sold goods worth 1 crore to Sandeep with a repurchase agreement that Pavan will buy back goods from Sandeep after 3 months for 1.2 crores. Sandeep, tell me, what is this?
Sir, this I
What
don't
is
know,
the
sir.
reality of these 2 lines?
I don't know, sir.
If I tell you reality, you will get almost a panic attack. Pavan came to Sandeep and asked, Sandeep, I am in need of money. Can you please give 1 crore? Sandeep said, you have those goods now? Put that goods in my godown as a security. So Pavan has given goods to Sandeep as a security and Sandeep gave 1 crore. After 3 months, Pavan has to go to Sandeep, pay 1.2 crores, release the security, take the goods. So it is damn a loan given against security. It is a financial arrangement. Guys, you understand this? Repurchase agreement is also a concept in CA final. Why ICA is giving all these in intermediate? Congratulations to you. For transactions where the seller concurrently agrees to repurchase the same goods at a later date, they are in substance a financing arrangement. Shit. The resulting cash flow is not revenue and should not be recognized as revenue. So in this transaction, Pavan sold goods. Pavan cannot write cash account debit to sales account being goods sold on cash. 1 crore is wrong. What Pavan has to pass, cash account debit to loan received against goods account. There is no revenue in this transaction. When I pay 1.2 crores, this is 1 crore, 1 crore. When I pay 1.2 crore, then loan received against goods 1 crore debit, interest paid 0.2 crores debit to cash account 1.2 crores. Then this 0.2 crores is there, no? This will be transferred to P&L. P&L account debit, interest paid. 0.2, 0.2. Sandeep.
Yes, sir.
You understand this accounting?
Yes, sir.
Do you think CA inter student will write this answer?
Never, sir.
And imagine, see, one lecturer is teaching RTP who incidentally happens to be final lecturer also, who knows Ind AS and IFRS, so he can explain things. If I am only CA intermediate lecturer, I cannot even understand what the hell this is, because this is from IFRS, no?
Yes, sir.
Now imagine if the student is reading without lecturer. Say Sandeep opened this RTP 2 days before exam. You will use all the beautiful gali from Malayalam, that chu, ta, ti, tu, ma, my lecturer did not tell all the, these are not there in the standard. What your lecturer will tell? Whether you scold ICI or whether you scold your lecturer, these are not there in the textbook. So repurchase agreements are finance arrangements. There is no revenue recognition. Guys, all of you, please let me know. Do you understand this third point? All of you, please let me know. You understand this third point? Very good. Fourth one is insurance agency commission for rendering services. This is normal AS9. I don't think there is any complicated thing in this. So insurance agency should be recognized on effective commencement of renewal dates. Normal point. This is like, services rendered. So whenever it is renewed, you take it to P&L. That's it. Okay. They killed you with all the questions. 19A, deferred tax, we'll see that. 20A, intangible assets, we'll see that now. 29, okay. 20 we'll see. So because we have seen one heavy thing, no, I don't want you to burden with all the heavy things. I can teach, but you cannot take it. Okay, so 16, 17, 15, all these things we'll see later. Earnings per share, this can be done easily. Yeah, this 18 can be done easily. 19 can be done easily. 19 will do. Okay, read 19A. Brinda, read it, ma.
The following transactions were reported by PQR Limited during the year 2020-21. Tax rate 30%, items disallowed in 2019-20 and allowed for tax purposes in 2020-21.
Okay.
20. Interest to financial institutions accounted in the books on accrual basis, but actual payment was made before the due date of filing return and allowed for tax purpose also. 20. Donations to private trust made in 2020-21 not allowed under income tax laws. 10. You are required to show impact of the above items with in terms of deferred tax assets or deferred tax liability for the year ended 31st March 2021.
Okay, so basically, do you remember there are two terms: timing, temporary difference and permanent difference? You remember, all of you? What is a temporary difference? What is a permanent difference? If there is a difference between accounting income and taxable income due to one item which has the capability of getting reversed in the subsequent years, then it is called timing or temporary difference. For example, if something is disallowed, like this, donations to private trust. So 10 lakhs you have given to a private trust, which is disallowed. So current year disallowed, that doesn't mean next year they will allow it. No. Try to understand the difference between this and this. Now, you have to pay 2 crore, 20 lakh rupees of interest to IDBI Bank, which you have not paid. But in accounting, based on accrual basis, in your P&L account, you have written 2 interest payable. 20 lakhs allowed. In accounting, it is allowed because accrual. But income tax officer will say, oh, hello, excuse me. Only when you pay interest, I will allow you. So first year interest accrual entry passed. Accounting allows it. But first year income tax return, they will disallow this interest accrued but not paid. Next year, they will allow it. This is called a temporary difference. Why? 1 year, the difference is arising. Next year, the difference is getting reversed. But this one is there, no? This is called permanent difference. Permanent difference. So it will never be allowed. Now you tell me, deferred tax assets liabilities will be created for temporary differences or permanent differences. AS 22 is not applicable for permanent differences. AS 22 is applicable only for temporary differences. You understand? So these 2 items are temporary differences. Third item is permanent difference. Now look at the answer. Look at the answer. Donation to private trust, not an allowable expenditure under IT Act. It is a permanent difference. It is a permanent difference. So AS 22 is not applicable, not applicable, not applicable. Now, interest to financial institutions, it is allowed as deduction under the IT Act if the payment is made before the due date of filing return. I think this is 43AB. I'm not sure. I think it is 43AB. Is it so? Hello, guys. You have to tell me. Payment is made before the due date. That means there is no difference. So on the date of balance sheet, you have not paid the interest. Interest is accrued but unpaid. But before the date of filing return, you have paid no. So it is allowed. So there is no difference between accounting and taxation for this 20. There is no difference. But here there is a difference. In 1 year it is disallowed. In next year it is allowed. So first one only there is a timing difference. Okay. So you will take that 20 lakhs, which is the difference. You will apply the rate and it is 6 lakhs. Now, how to understand whether it is a deferred tax asset or a deferred tax liability, or reversal of deferred tax asset or reversal of deferred tax liability? There are total 4 points. It can be a DTA, DTL. It can be reversal of DTA. It can be reversal of DTL. Your journal entry depend on this 4. So you have to thoroughly understand AS 22 first. Okay. So don't